Do these words sound like a foreign language? Recession, growth, stocks, finance, forex? Well, they did to me at first, until I sat down and started to read a ton of books on the subject. Believe me, it took me quite a while before I started to understand what they even meant, and more important, how to benefit from them. Now, due to the economic situation, more and more people are finding interest in the world of finance, wondering how all the current problems started, and especially how can they make good use of the situation. Okay, so let's try to simplify the whole explanation and see what started this massive economic avalanche. Now, after huge losses throughout 2001 to 2003, many opportunists took advantage of the situation, hoping that in years to come they will be able to prosper from a better future. Making good use of the financial system at the time, many took loans from financial firms, lenders, building themselves massive castles, buying up land, and investing in structures that were supposed to yield back great returns over the years. In the meantime, the king of the land and his advisors, the central bank, encouraged this trend by keeping a low regulation environment, allowing the economy to reach the most important objective, economic growth. As the years went by, more and more people started to take loans, building, constructing, and helping the economy to reach its target. Now, unfortunately, unlike in fairy tale stories, money really doesn't grow on trees, which basically means that those financial firms that provided borrowers with money had to borrow money themselves from other financial firms across the entire globe. Sounds okay so far, no? Well, euphoria was the state of mind at the time, as everybody knew that after a recession, the only way is up, and everyone in the end would receive their money back. Now, to ensure that, those financial firms, the lenders, pegged the loans given to the borrowers' investments to the castles being built, to the buildings, to the structures, to the land. This basically meant that if the borrowers couldn't pay back their loans at the predetermined date, the lenders would seize those investments, the castles and the buildings, returning them to the larger global lenders instead of cash money. In addition, as this fairy tale didn't take place in a philanthropic world, every lender, in addition to receiving his loan back at the end of the agreed time, demanded interest on his money. This meant that the borrowers had to give back money with interest to the lenders, who then had to give back the same money to global lenders, all of course with interest. What a vicious circle. If we now associate the story with some financial terms which might complicate the story a little bit, it basically meant that the financial firms borrowed money from global lenders and in return issued bonds that would eventually yield interest. Those bonds were backed by physical assets that were built or being built by the final borrower of the money. As the years passed, everyone lived in harmony and the economy grew until one day the borrowers found it difficult to give back their borrowed money. Due to the constant demand in the economy and rising interest rates, borrowers were now paying much higher debt. In addition to the situation, home prices began to drop due to the lack of demand. From a fairy tale story, one that everyone was profiting from, people, financial firms and banks, they all found themselves in a nightmare of writing off debts as borrowers could not pay their loans, a situation called a liquidity crisis. Okay, now you have to remember that in the beginning of this story, the lenders took precaution by pegging assets, the castles, the houses and structures being built, to the loans. But what happens when those loans are now worth half of their price? Who's going to pay back all that lost money? From an innocent situation of borrowing money, debts were now owed all over the world. As borrowers could not pay back their debts, financial lending firms ran into huge losses, which forced them into write-offs, causing massive global debt. Seeing the extent of the problem way ahead of time, governments and central banks used different tools along the way to prevent the problem. By pumping a load of money into the system, buying up assets and decreasing interest rates. The aim of all of this, of course, was to kickstart the economy and get it running again. Okay, so now that we know what happened, what can we really do with all this info? Well, basically, this same type of story tends to reoccur due to one or another reason every so couple of years because of our desire to make money. Money, money, money. So I say it like this: if you're money driven or you just want to check out a new field, take a quick look at our lessons on our site. You might even find it interesting, and it might even help you make some extra money.